Ever pondered about the current state of the stock market? Well, the financial world is currently in a fascinating place. We're seeing a mixed trend in stocks, with some showing promising growth, while others experience a slight dip. This volatility is the heartbeat of the market, keeping investors on their toes. The dollar, though, seems to be on a steady climb. The greenback's strength can be a double-edged sword. It can make U.S. goods more expensive for foreigners, potentially hurting exports. But on the flip side, a strong dollar can also be a sign of global confidence in the U.S. economy. Now let's pivot to something that every market participant eagerly awaits: the release of U.S. economic data. This information acts as a barometer for the health of the economy. It can cause ripples throughout the market, influencing decisions of traders and investors alike. Whether it's unemployment rates, inflation figures, or GDP growth, each piece of data can set a new course for the market. It's like a domino effect, with one economic indicator potentially impacting several sectors. So, with this mixed bag of market trends, what could the future hold? Now let's dive into the recent changes that have been shaking up the stock market. In the past few months, the stock market has been akin to a roller coaster ride, with certain sectors experiencing significant ups and downs. For instance, the technology sector, which has been a star performer for several years, has recently faced some headwinds, with investors growing cautious about high valuations and potential regulatory scrutiny. On the other hand, more traditional sectors like energy and industrials have seen a resurgence, driven by rising commodity prices and a rebound in global manufacturing activity. Now, what's been driving these shifts? A combination of factors, actually. Investor sentiment, for one, plays a crucial role. As the saying goes, the market is driven by fear and greed. Recently, there's been a sense of caution in the air, with investors worried about issues ranging from inflation to geopolitical tensions. This sentiment is reflected in the market's recent volatility. Economic indicators are another key driver. Data on employment, consumer spending, and other aspects of the economy can significantly influence how investors perceive the health of the market. For instance, strong job growth can boost investor confidence, leading to a rise in stock prices. On the flip side, weak economic data can trigger a sell-off, as investors worry about the potential for a slowdown or recession. Lastly, policy decisions, particularly from central banks, can have a profound impact on the stock market. For instance, if the Federal Reserve decides to raise interest rates, this could make borrowing more expensive, potentially slowing down economic growth and affecting stock prices. These changes, while sometimes unsettling, are part and parcel of the stock market. They affect not just individual stocks, but the broader market as well. For example, a downturn in tech stocks can drag down indices like the Nasdaq, while a rise in energy stocks can boost the S&P 500. These changes are indeed a testament to the dynamic nature of the stock market, aren't they? So, to sum up all that we've discussed today, we've taken a deep dive into the current state of the stock market. We've seen that it's a mixed bag, with some stocks rising while others are on a downward trend. This fluctuation is a part of the market's dynamic nature, which is influenced by a multitude of factors. In our journey through recent changes, we've noted how the dollar has been gaining strength before the unveiling of U.S. economic data. This anticipation illustrates the market's sensitivity to economic indicators and the potential impact they can have on investment strategies. We've also highlighted the importance of staying informed. By keeping an eye on market trends and economic updates, investors can make more informed decisions and navigate the ever-changing landscape of the stock market. Remember, knowledge is power when it comes to investing. It's essential to understand that the stock market is an entity in constant motion, shaped by global events, economic policies, and investor sentiment. Each of these elements plays a significant role in the market's performance and the value of your investments. That's the stock market for you, always keeping us on our toes. Until next time, keep watching the market and stay informed.